What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put any amount of money in that brokerage account, they're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of this video. Go click on that Webull link. Open up your new account today. Go get that free stock. Go get that free money. I'm going to also send you a free Webull tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is DM me on Instagram at RichardFane28. Let me know you've opened the Webull account. Let me know you funded the Webull account. And I'm going to send you that free tutorial video so that you can start building wealth today. 84% of Fortune 500 CEOs have went on record saying that they believe there will be a recession. The reason they think that way is because of debt. Most of your major companies in the United States borrow money to grow. And a big part of these 84 CEOs who believe there will be a recession, their companies have borrowed a lot of money using short-term interest rates. And they may have taken these loans out 3 years ago. They may have taken them out prior to the pandemic. But a lot of these loans are gonna be maturing and coming due. And we know right now where interest rates are. They are through the roof for short-term borrowing. Even for long-term borrowing, they're through the roof. So a lot of these Fortune 500 CEOs are afraid that when this debt comes due and they have to reset their interest rates, instead of resetting them at 2 or 3%, they're going to have to reset them at 5%, 6%. A lot of them do not believe they will be able to service that debt at double the interest rate. And of course, our economy is made up of companies. And if those companies cannot make enough money to service their debt, they're going to have to do some cost-cutting measures. And the number one thing companies cut when they have to reduce expenses is payroll. And when payroll is cut, people lose their jobs. The unemployment rate goes up. And that, my friends, will cause a recession. So that's one reason. Another reason is when you look at the credit card debt in this country, it's at $1.3 trillion. A lot of economists believe that number is going to continue to increase until something breaks in our economy, until people are feeling so much financial pain that they shut down spending altogether. And of course, guys, our economy is made up of 70% of consumer spending. So if people stop spending, our economy does not grow. And if our economy does not grow, then technically, guys, we're going to be in a recession. The third reason is anytime the Federal Reserve has increased interest rates the way they've increased them over the last 20 months, it's typically followed by a recession. And the recession normally comes, on average, about 11 months after the Fed stops increasing short-term interest rates. And the last time they increased interest rates was July 2023. 11 months from July 2023 would put us at June 2024. History says that could be the start of a recession. let's say the Fed decides to bump interest rates this week on November 1st. 11 months from November 1st would put us at October 2024. Sometime between June and October 2024, potentially there could be a recession based on what history tells us when the Fed stops hiking interest rates. All three of these things I just gave you are real. Now, let's talk a little bit about why the market hasn't crashed. Let's start with our robust labor market. When the economy defies all odds, it defies high interest rates, it defies high inflation, it defies high credit card debt, high student loan debt, and it continues to grow. It's growing because people have jobs. People are making wages on those jobs. So I think the number one reason why the market hasn't crashed, the economy hasn't crashed, we haven't went into a recession, is because of this strong labor market that we have. I think the second reason we have not went into a recession is because of the upper 20% of wealthiest people in this country and foreign investment. See, you're wealthy of the wealthy. They got money, they got assets. They're still buying and spending and having a good time and taking their luxury trips, right? They've made a lot of money in assets since 2008 when we had the last major recession. See, this 1% have done extremely well, and they continue to do extremely well, right? So they're able to prop up our economy with their spending. Also, what's able to prop up the economy is the 99% who have been using their credit cards to continue buying, right? They've also used their active income, because remember, we got a strong labor market, so people can still work and afford to go out and buy the things they need. A good majority of the 99% are doing that, coupled with their credit cards. We already know the 99% don't really have any more personal savings, right? In this country, 2 years ago, we had $2.1 trillion in personal savings. That's all the way down to about 200 billion. Why am I still investing, given the fact that a lot of folks think there's going to be a recession? Why not take your money out of the market, park it on the sideline, and wait this thing out? I just don't think time in the market is the way to build wealth, guys. I think you got to be in the market. If you think about 2020, when the pandemic broke out, a lot of people panicked, sold their investments, thought they're going to lose it all. I didn't do that. I kept my investments in place and I continued to buy. And then guess what happened 57 days later, after the initial 35% decline in the stock market? It was at all-time highs again. My point here is, guys, had I taken my money out of the market, I would have missed that opportunity to build more wealth. And that's what I'm afraid of doing right now. If I take my money out because I'm panicking and I'm fearful and I'm listening to the propaganda machine the 1% has going right now, because obviously they want you to sell when you really should be buying. They want you to buy when you really should be selling. I'm not going to build my wealth the way I want to build it, because if I try to time the market, I'm not going to win. I'll never time it perfectly. And if I miss over the next 18 months, I miss the top 10 days, then I'm not going to make any money. You got to understand, guys, you don't make money in the stock market every single day. You in the market every day, but it's them 10 or 15 days every couple of years that it goes crazy where you make the money. But if I'm sitting on the sideline those 10 or 15 crazy days where it just goes to the moon, I'm sitting on the sideline and I try to get in at the tail end of it, I just missed it. So for me, it's in the market every single day through dollar cost averaging as opposed to trying to time the market and be the expert. You better consider that, guys. As you listen to all this propaganda out here, you're going to hear people say there will be a recession, there won't be a recession. Listen, guys, history tells me this: whether there's a recession or not, if I'm in the market every single day through dollar cost averaging and I have a long-term outlook, I will win. That's what I've done for 25 years, and it hasn't failed me yet. The only time I've failed in the market is when I try to be the expert and time the market. That's when I would get into trouble. As long as I was just time in the market instead of trying to time the market, I've always done well. And I'm going to recommend you take that same approach. Drop me some comments down in the comment box and let me know what you think. Will there be a recession? Won't there be a recession? Love to get your thoughts. If you want those 12 free stocks from Webull, guys, you got to click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.